nature of taxation and tax. The taxation means the process by which the government levies on the individuals and entities and expenditure of taxation and tax. Taxation is a means for a state, through laws and legislations, to obtain income to finance public expenditures. Through taxations, the government is able to provide public education, health services, and infrastructures that benefits the people. Taxation is the process by which a government is levies taxes on individuals and entities to fund public services and expenditures. It is a state's power exercised through laws and legislation to raise revenue. The primary purpose is to finance government operations. This includes essential services like education, healthcare, and etc. Onus is a Latin term for burden or obligation. So, tax is a fee imposed upon individuals, properties, transactions, and business entities to support the necessary expense and service of government. It is also defined as an enforced proportional contribution from person and property levied by the state by virtue of its sovereignty for the support of government and for all public needs. Taxation is a compulsory obligation, not a voluntary contribution. Citizens and businesses are legally required to pay taxes. Taxation is an obligation, not an option. So, it requires taxpayers to contribute a certain proportion of their income or wealth. Taxation in this case is a burden. While necessary, taxation is often viewed as burden as it represents a portion of an individual's or entity's income or wealth that is relinquished to the government. Tax is not the same as taxation. A tax is a fee, whereas taxation is a process. Taxation is a mandated subject by the Constitution. It is integrated in all social science courses. All enrolled college students, whether in public or private schools, are required mandated to study taxation as an integrated subject in humanities and social science. The primary characteristics of tax are: 1. It is an obligatory or a forced contribution to the government. Taxes are not voluntary, they are legally mandated payments. Failure to pay can result in penalty and legal consequences. 2. It is usually monetary in form. Taxes are typically paid in money, although in some historical instances, taxes has been paid in goods or service. 3. It is proportionate in character. While not always perfectly proportional across all income levels, taxes are generally designed to be levied in a systematic way, often based on factors like income, property value, or consumptions. 4. It is imposed on person and properties. Taxes can be levied on individuals, income tax, personal property tax, or on assets, property tax, and inheritance tax. 5. It is levied by the state that has jurisdiction over the person or property. Taxes are levied by the state, national, regional, or local government that has legal authority over the person or property being taxed. This means that the government must have the legal right to impose the tax within its territory. 6. It is levied by the legislative body of the state. The power to impose taxes is typically granted and exercised by the legislative branch of government. This ensures that tax laws are created through a democratic process and are subject to public scrutiny. 7. It is levied for public purposes. The revenue generated from taxes must be used for public purposes, such as funding government operation, provide public services, and supporting national defense. This means that the money cannot be used for private gain or the benefit of specific individuals.
What are the classifications of taxes? So, here are the classifications of taxes.
According to object, what is being taxed? tax, personal tax, taxes on individuals such as income tax or resident tax. Example, community tax or residence tax. Property tax, taxes imposed on property ownership. Example, real estate. Consumption tax, taxes on good and service purchased by customers. Example, value-added tax and excise tax. Second, according to who bears the burden, direct tax, paid directly by individuals or businesses to the government. Example, income tax, estate tax, and community tax. Indirect tax, paid indirectly through the purchase of good and service. Example, VAT, excise, customs, and duties. According to determinations to tax amount, specific tax based on quantity or measurement standard. Example, taxes on fuel based on liters purchased. Ad valorem tax based on the volume of the tax item. Example, real estate tax, personal taxes. 4. According to purpose, national tax imposed by the national government. Example, income tax, customer duties, and revenue tax. Second is local or municipal tax, imposed by local government, unit for local needs. Example, real property tax, typically imposed by city or county governments to fund local service. Businesses permit fees charged to local businesses for operating with a municipality. So, taxes are classified based on what is tax, personal property consumption, who pay the tax, direct or indirect, how the amount is determined, specific or ad valorem, and impose the tax, national or local government. So, next is proportional tax system, flat tax definitions, everyone pays the same tax rate regardless on income level. Purpose, simple to administer, treat all the taxpayer equality. Progressive tax system, as income increases, the rate of tax also increase. To reduce income inequality by tax higher earners more.
So right now we will be discussing about kinds of national taxes. So let's begin.
Kinds of national taxes. Number 1, income tax. Ito yung tax na binabayaran based sa kita mo whether empleyado ka or may negosyo. Example, kung kumikita ka ng 50,000 per month, may part nun na mapupunta sa income tax. And number 2, estate tax. Tax ito sa properties na iiwan ng taong namatay. Example, kung may naiwan kang bahay or lupa worth 5 million, kailangan mo na bayaran ang estate tax bago mapamana. Number 3, donors tax. Tax na binabayaran kapag nagbigay ka ng malaking halaga o ari-arian sa ibang tao habang buhay ka pa. Example, nag-donate ka ng 100,000 sa kaibigan mo, possible na may donors tax na kailangan bayaran. Number 4, value-added tax or VAT. Tax na dinadagdag sa presyo ng products and services. Example, bumili ka ng laptop worth 1,000 tapos may 12% VAT kaya magiging 1,120 ang total. Number 5, percentage tax. Tax na binabayaran ng mga small businesses na hindi sakop ng VAT. Example, kapag may sari-sari store ka at kumikita ka ng 10,000, magbabayad ka ng 3% na percentage tax or 300. Number 6, excise tax. Special tax sa mga sin product like alak, sigarilyo at gasoline. Example, bawat pakete ng sigarilyo may dagdag na tax kaya mas mahal siya. Number 7, documentary stamp tax. Tax na binabayaran sa mga legal documents. Example, kapag umutang ka sa bangko, may documentary stamp tax sa loan documents. Number 8, types and custom duties. Taxes sa mga imported goods. Example, kapag nag-import ka ng kotse from abroad, may terms na kailangan bayaran. Number 9, travel tax. Binabayaran to kapag lalabas ka ng bansa. For example, kung magta-travel ka abroad, usually may travel tax na around 1,620. Number 10, private motor vehicle tax. Tax sa mga sasakyang pagmamay-ari ng private individuals. Example, every year kailangan mong magbayad ng registration at Motor vehicle tax depende sa type ng sasakyan mo. Lastly, number 11, energy tax, tax sa paggamit ng electricity or energy. Example, kung malakas kang gumamit ng kuryente sa business mo, may dagdag energy tax sa bill.
Good day everyone, I am Julaika Arlim. Today I'm going to discuss about income taxation.
So, income taxation refers to the wealth that flow in the taxpayer other than as a mere return on capital. Taxable income refers to the gross income less deduction of a personal and additional exemption. Passive income are those income from interest on bank deposits, dividing price and winning. All kinds of income are taxable, even those derived from a gambling. So, income tax is the money you pay the government on the money you earn your income. It does not include money you make just from investment. The government figure out how much tax you own by looking at your total income, minus certain deduction. Even money from things like lottery, wins, or interest from a bank account is taxable income. So next, gross income are those 1. Composition for service, fee, salary, wage, commission, and etc. This is the think of your paycheck from a job. So number 2, conduct of trade or business or the exercise of a profession. This is income generating from running a business, whether it a large corporation or a small sole proprietorship. This is the profit you make after expenses. Number 3, gain derived from dealing in property. This is a profit from selling property such as a land, building, or stock. The difference between what you bought it for and what you sold it for. Number 4, interest. Interest is the money earned from saving account, bonds, or other investment that pay interest. Number 5, rent. A money received from renting out property such as apartment, building, or a single apartment. So 6, royalties. A payment received for the use of intellectual property such as a book, song, or patent. Number 7, dividing. Dividing is a payment received from owning share of stock in a company. So number 8, prize and winning. A money won from a lottery contest or gambling. Next, number 9, pension. Pension is a regular payment received after retirement from a previous employer or retirement plan. Next, number 10, partner. Share from the net income of the general partnership. This is a share of the profit from a business partnership. So next, net income is gross income less allowance deduction. This is your total income after deduction. It's your gross income, all income sources, minus allowable deduction. This is the amount used to calculate your actual tax liability. And then, next, excluded from gross income are number 1, life insurance. Life insurance, money received from a life insurance policy due to a death claim. Number 2, if request, a money received as a gift or donation. Next, number 3, compensation for injury, pension, gratuities, such as tip, amount received by the insured, as returned as premium. Essential money received due to injury or as a benefit, not as earned income.
So hi, my name is Ara Inisamis and I will discuss about the purpose of income tax. So let's start.
First, to provide revenues for the government. Individual income tax serves multiple crucial purposes within a nation's economic and social framework. The primary reason for levying income taxes is to generate revenue for the government operations. This funding is essential for financing public services such as infrastructure, education, healthcare, national defense, and social welfare programs. Without sufficient tax revenue, governments would struggle to provide these essential services. Second, to offset regressive sales and consumption taxes. A second significant purpose is to mitigate the impact of regressive taxes. Regressive taxes, such as sale taxes and excise taxes, disproportionately affect lower income individuals because they represent a larger percentage of their income. Income taxes, particularly progressive income taxes, where higher earners pay higher rates, can help offset this imbalance by redistributing wealth and reducing economic inequality. Third, to mitigate the evils arising from the inequalities in the distribution of income and wealth which are considered deterrents to social progress. Finally, income taxes plays a vital role in addressing income and wealth inequality. High levels of inequality can hinder social progress and create societal instability. Progressive income tax system aim to reduce these disparities by taxing higher earners at a greater rate, thus promoting a more equitable distribution of resources and contributing to social stability. In summary, individual income taxes are a cornerstone of modern governance, serving not only as a primary source of government revenue but also as a tool for promoting social equity and economic stability. The design and implementation of income tax systems are subject to ongoing debate and adjustment to address evolving economic and social needs.
Hello everyone, my name is Marati Marani. So for today, I'll be discussing a principle of taxation. So let's start.
Principles of taxation. The 18th century economist and philosopher Adam Smith attempted to systematize the rules that should govern a rational system of taxation. In the Wealth of Nations, he set down 4 general canons. Number 1 is the subject of every state ought to be contribute towards the support of the government as nearly as possible in proportion to their respective abilities, that is, in proportion to the revenue which they respectively enjoy under the protection of the state. The government should collect taxes based on what people can afford. Ang mga mayayaman ay dapat magbayad ng mas malaki dahil mas malaki rin ang kanilang kinikita at proteksyon na natatanggap mula sa gobyerno. And number 2 is the tax which each individual is bound to pay ought to be certain and not arbitrary. The time of payment, the manner of the payment, the quantity to be paid ought all to be clear and plain to the contributor and to every other person. Ang buwis ay dapat malinaw at tiyak. Dapat alam ng lahat kung magkaano ang babayaran, kailan at paano. Hindi dapat biglaan o pabago-bago ang pagbubuwis. And number 3 is every tax ought to be levied at the time or in the manner in which is most likely to be convenient for the contributor to pay it. Ang pagbabayad ng buwis ay dapat na maginhawa para sa mga tao. Dapat piliin ng paraan ng pagbabayad na hindi magiging pabigat sa kanila. And the last is every tax ought to be so contrived as both to take all out and keep out of the pockets of the people as little as possible, over and above what it brings into the public treasury of the state. Ang gobyerno dapat magtipid sa pagkokolekta ng buwis. Ang gastos sa pagkokolekta ay dapat maliit lang para mas maraming pera ang mapupunta sa mga proyekto.
Hello everyone, so today I'm going to discuss about the burden of taxation. So these are the following.
First, the nature of taxation. Taxation is a primary method of government finance, transferring resources from the private to the public sectors. So taxes are coercive with punishment for non-compliance. So this is contrast with voluntary transaction like government bonds and service fees. So the burden taxation is how government get money from citizens. So, it's mandatory, meaning you have to pay or face penalties. Unlike buying government bonds or paying from services, taxes are not optional. So, example, imagine you're a business owner and you have to pay a taxes on your income. And if hindi mo to nabayaran, you might get fined or penalized. So this is a different from choosing to invest in government bonds or paying for a government service like a driver license. So next, the measuring the burden of taxation. So there are two ways to measure the burden of taxation. So first, the cash payment. So calculate the amount paid to the government. This method is widely used but may not accurately reflect who bears the burden. So this is the amount you directly pay in taxes. So example, you earn 100,000 pesos and pay 20,000 pesos in taxes. So your cash payment is 20,000 pesos. So next, the opportunity cost. So measure the losses imposed on taxpayers, including reduced consumer surplus and profits. So this approach recognizes that taxes can reduce market transactions. So the opportunity cost, ito ang apekto ng buwis sa iyong mga pagpipilian at pagkawala. So halimbawa, mga business owner. So habang kumikita sila sa kanilang mga business, nagbabayad sila ng tax or buwis. So nawawala yung oportunidad nila na mas mapalago pa ang kanilang business dahil nagbabayad sila nito. Dahil sa pagbayad ng buwis ay malaking tulong pa or malaking oportunidad upang mas mapalago pa ang kanilang business, tulad sa pagdagdag sa kanilang income or pagbayad sa mga empleyado at pagdagdag nito. So the burden of taxation is not always borne by those who directly pay the taxes. Understanding the actual impact of taxes on individuals and business is crucial. And that's all for my topic, and thank you for listening.
So, good day everyone. Today, I will be discussing the benefits of paying the right taxes. So, these are the following.
Benefits of paying the right taxes. Sourced by Maria Lourdes Emianueria, CPA. So paying the right amount of tax has been one of the serious topic concerning most income earning in the Philippines. Many, if not all, wants to as much as possible reduce the amount of they will have to pay the BIR as such they engage to all kinds of way to reduce their tax obligation, such as tax amnesties, tax avoidance, and even tax evasion. So ngayon, pag-uusapan natin kung bakit ba ang tax ay one of the serious topics. So ngayon, pag-uusapan natin ng 6 na different scenario of taxes. So first is no minimal BIR audit. Oftentimes, the reason you or your business received the letter of notice from the BIR is caused by the following failure to file and pay the tax return. The BIR is questioning the amount of tax paid or both. By filing and paying the right amount of tax, it will minimize the instance that BIR will audit your accounting records. So example na lang nito. If you pay the correct tax, BIR is likely to check your record. So sinasabi dito, pag binabayad mo naman tama ang iyong tax, yung BIR hindi naman i-check yung record mo. So example of a bakery that pays the right tax when you get surprise visit from the BIR. So, example nito, kung ang bakery ay nagbabayad naman ng tama yung taxes niya, so di na siya mag-expect na magbibisit pa ang BIR sa kanya para magsingil ng taxes. So, second is peace of mind. Being audited by BIR may cause high amount of stress, special to taxpayer who intentionally or illegally decrease their tax payment. Sometimes it can affect even your personal life, which is give you sleepless night and anxieties. So, example scenario of peace of mind. You won't feel stressed or worried if you know you paid the right taxes. So, sinasabi dito, di mo kailangan ma-stress o di ka ma-worried kung binabayad mo naman ang tamang taxes na binabayaran mo. So, example naman dito, a shop owner can sleep well at night knowing all taxes are properly paid. So, kung alam mo naman binabayad mo yung tama, wala kang iniisip na wala kang binabayad. So, nakakatulog ka ng maayos at walang sagabal sa iyong pagtulog. So, third, truthful income tax return. Problems when they need to generate an income tax return for purpose of as such, they resort to preparing inaccurate produce said requirements. The risk on visa and loan application producing an inaccurate tax return is high because if the agency verifies income tax return in order in it to the BIR, it will cause big trouble. However, if you are diligently filing and paying the right amount of tax, it's easy to produce accurate income tax return without any risk. So, this is an example of truthful income tax return. It's easier to use your tax return for visas or loans if it is accurate. So, when applying for a visa, your clean tax record helps you get approved faster. So, example dito yung visa nga. Pag binabayad mong maayos yung taxes mo, maayos ma-approve yung visa mo or loans pag accurate naman yung pagbayad ng tama sa taxes. Fourth is good credit rating. Paying the right amounts of tax provide and good credit rating to financial institution and agency. The higher the income and tax you declare, the higher the credit rating. You can use your good credit rating when getting a loan for additional funds for expansion of your business or for future purposes. So this is an example of good credit rating. Bank trusts you more if you pay the proper taxes and report your real income. So kung binabayad mo maayos ang yung taxes, yung bangko ay malaking trust na sa'yo para sabihin ang real income mo. So example naman dito, a business that show good income and tax payment can easily get a bank loan. So fifth is good investor value. In order for your business to grow, at some point you need people with money that are willing to invest in your company or institution. These investors will look into your financial and tax record to support their investment decision. Maintaining a truthful and accurate accounting and tax record will boost confidence of investors. On the other hand, fraudulent and inaccurate tax payment will create an impression that the company is not trustworthy to invest it. Example of good investor value. Investor want to put money in honest business with clean tax record. So kung may malaki kang company, so syempre isipin mo kung legit ba or fake yung mag-i-invest sa'yo para magkaroon ng honest business and clean tax records. So example naman dito, a startup looking for investor gains trust because its tax records are clean. So yun na nga, kung magpapa-invest ka, syempre titignan mo yung record pag malinis ba at trust ba yun. So lastly is social responsibility and contribution to the country. Paying the right tax is a social responsibility to the country. The taxes we will pay will go to the government funds that will be used in developing and improving the government facilities and life of Filipino inside and outside the country. If all income earners will pay the right amount of tax, the government can collect more money to support its objective such as building roads. So, example of social responsibility and helping the country. So, example, tax help builds roads, school, hospital, and improves lives. So, yung taxes pala, yung kung ano ang dinadaanan natin ngayon patungong kung saan natin gustong puntahan. So, isa din rason kung ba't yung roads ay mas mapabilis ang paggawa dahil din sa isang taxes. Hindi lang roads, pwede din school, hospital, tsaka ma-improve yung daily lives natin. So one of example naman, by paying the taxes, a business owner helps the government build a new school. So ngayon nakikita natin, ang dami ng paaralan. So isa din dahilan kung bumabayad ba tayo ng tamang taxes sa government. So that's all guys, thank you.
Mabuhay, happy Isabella. I am Muhammad Irshid Siniran. So right now, I will be tackling the Tax Reform Law of 2018. So let's start and learn more about the Tax Reform Law of 2018.
The Tax Reform Law of 2018. The Tax Reform Law of 2018 is the tax reform for acceleration and inclusion, or TRAIN law, signed by President Rodrigo Duterte on December 19, 2017. Is a comprehensive tax reform package aimed at promoting economic growth, reducing poverty, and enhancing tax administration. Background: prior to the TRAIN law, the Philippine tax system was criticized for being complex, inefficient, and unfair. The TRAIN law aimed to address these issues by reducing personal income taxes rates, increasing excise taxes on certain goods, and rationalizing tax exemptions. Key provisions: the TRAIN law reduced personal income tax rates, with the top rate from 32% to 25%. Second, excise taxes. The TRAIN law increased excise taxes on certain goods such as fuel, tobacco, and sugary drinks. 3. Value-added tax or VAT. TRAIN law exempted certain goods and services from VAT such as prescription medicines and rent-on-law cost housing. 4. The tax exemption. The TRAIN law rationalized tax exemptions, removing exemptions for certain industries and individuals. Ethical implications. First, progressivity. The TRAIN law has been criticized for being regressive, as the increased excise taxes on certain goods disproportionately affect low-income households. Second, fairness. The TRAIN law has been praised for promoting fairness by reducing personal income tax rates and rationalizing the tax exemptions. Third, the redistributive justice. The TRAIN law aims to promote redistributive justice by allocating revenue generated from excise taxes to fund social programs and infrastructure projects. Fourth, the transparency and accountability. The TRAIN law has been criticized for lacking transparency and the accountability, as the revenue generated from excise taxes is not explicitly allocated to specific social programs and infrastructure projects. Impact. First, revenue generation. The TRAIN law generated significant revenue for the government, with excise tax collections increasing by 58.4% in 2018. Economic growth, or the second, the TRAIN law contributed to the Philippines' strong economic growth, with GDP growth rate averaging the 6.4% from 2018 to 2020. Third, the poverty reduction. The TRAIN law's provisions, such as the increased take-home pay for long-income earners, help reduce the poverty incidence in the Philippines. 4. The inflation. The TRAIN law's excise tax provisions contributed to the higher inflation rates in 2018, which affected the low-income households in the Philippines.
Classification of taxpayers. Taxpayers are classified into individuals, corporation, and general partnership. Individuals. There are two: citizens, resident, non-resident, aliens or foreigners, resident and non-resident, those engaged in trade or business in the Philippines, and those who are not engaged in trade or business. Sa corporation, there are two din: domestic or those incorporated under Philippine laws, foreign or those incorporated under Philippine laws. General partnership, general professional partnership. Partners are liable for income tax based on their respective shares in the profits of the partnership. 2. General co-partnership. The purpose is to engage in business. The taxable income declared by the partnership is subject to corporate income tax, who are required to file income tax return. Every resident citizens, every non-resident citizens and resident aliens, every non-resident alien engage in business.